News, rumors and opinions Monday, July 21, 2025. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Why central banks aren't done buying gold. APMEX, July 20, 2025. Central banks worldwide have become the most enthusiastic buyers of gold, elevating it to the position of the world's second largest reserve currency, surpassing the euro and increasingly challenging the dominance of the US dollar. This trend is a continuation of a long-term policy that started gaining momentum after the 2008 global financial crisis and the ensuing quantitative easing measures. Despite a period of relative disinterest in gold from 2011 to 2020, central banks quietly accumulated reserves throughout, with purchases accelerating significantly. In recent years, particularly in 2022, this surge in gold buying is driven by geopolitical instability, economic uncertainty, and the desire to hold an asset that carries no counterparty or default risk. The World Gold Council's recent survey of central banks reveals a strong consensus that gold will continue to play a larger role in global reserves over the next 5 years. Nearly all surveyed central banks expect to increase their gold holdings in the near term. This trend contrasts with the weakening confidence in the US dollar, whose share of foreign reserves has been steadily declining and is expected to continue this trend. The loss of the US government's AAA credit rating, ongoing fiscal challenges, and inflation concerns contribute to central banks' preference for gold as a stable and risk-free asset. Gold's appeal lies not only in its historical performance during times of crisis but also in its role as an inflation hedge and a reliable store of value that is not subject to default risk. Alternative reserve currencies like the euro, yuan, and yen also carry risks such as inflation and potential default, making gold an increasingly attractive option. The combination of sustained accumulation and rising gold prices solidifies its position as a key pillar of global reserve assets. For investors, the ongoing commitment of central banks to gold suggests continued support for a strong gold market, at least in the near future. In conclusion, the video presents a comprehensive overview of why central banks are heavily investing in gold, revealing a strategic shift driven by risk management, geopolitical and economic uncertainty, and declining confidence in traditional fiat currencies, especially the US dollar. For investors, understanding this dynamic is crucial as it underpins the ongoing strength and future potential of the gold market. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: Dinar Recaps.